Welcome to the Ralph Bivens Project. I'm Ralph Bivens. We're here in the energy capital of the world, Houston, Texas, and with oil at $100 a barrel, gasoline at $4 a gallon, most of it. What a great place to have a discussion, right? And we're here today with Bob Parsley. He's chairman of Colliers Houston, which is one of the biggest commercial real estate companies in the state. And he knows, he's an expert in a lot of these fields: skyscrapers, office space, medical space. He's got a pretty good handle on anything on commercial real estate. He's got a handle on it. But really, I guess, Bob, with oil at $100 a barrel plus, which hadn't happened since 2014, I guess, maybe longer. Some of these levels. What does that mean for us? What does that mean? $100 a barrel.
Well, Ralph, first, thanks for having me on today. I really enjoy it. As you and I know, we've been friends for a long time and lived through a lot of experiences. And these days remind me of things that we lived through in our earlier lives. I was telling some of the young people who work for me this week that I can remember back in the oil shocks in '84 when we were sitting in line at the gas station for over an hour just to fill up. And, we don't see that now at the moment, but it does bring back memories of days gone by. I think that there's a lot of uncertainty in the world today. That goes without saying. And one of the things that I think, unfortunately, we're going to see, it's around the horizon, is that with the uncertainty in Russia and the Ukraine, with oil prices, of course, skyrocketing, that a recession is around the corner. I don't think there's any question about it. With the activity that we're seeing in the Ukraine and Russia, we know that, for example, 30% of the world's wheat comes from the Ukraine. The Ukraine supplies most of the neon gas and other minerals that go into all the new electric cars. All that is being halted. We can't build tech. It's source materials, and unfortunately, a lot of it comes from that part of the world. We saw yesterday that nickel trading was halted on the exchanges. Nickel comes from the Russia-Ukraine area of the world. So all these activities, all these events are creating what I think will become a recession around the corner. That obviously add into that is increase in oil prices. I've said that the question becomes, how much solidarity as a country do we have? How much are we willing to withstand? Because it is certain that we will continue to see prices rise. We've already seen transportation costs rise, food prices are going up, and now oil prices are going up. So it's between inflation that was already, there, plus what is uncertainty, it's magnifying this issue. And so the question becomes, in our conversation today is, we understand what the world result or the result in the country is going to be, but how does that impact the real estate market in Houston?
It can't be good, I don't think. The oil companies they're making now a lot more revenue from oil than they used to be, but I keep hearing, hey, they're not ready to start hiring people. They're going to be conservative in that regard, like they have for a long time. But back in the day, oil hit $100 a barrel. Oil companies were saying, "Hey, we need at least some more space. We need to build a new building. We need another headquarters." but that's not going to happen this time, I guess.
I don't, of course, as you know, at Colliers, we cover the whole spectrum of commercial real estate. So we look at all the different practice groups, and each one of them I think has this is going to impact them differently. As an example, I'm just kind of looking at a couple of them. In the office market, we're already at a fairly high vacancy rate in the market. I don't think this is certainly going to help, increase the occupancy regardless of higher oil prices. We've seen energy companies become, number one, more efficient. A lot of even when we're seeing increased production, it doesn't mean more people. It means more efficient ways of pulling oil out of the ground. And I don't think it's really going to have an impact on, leasing more office space at the moment. That combined with all this, the coming out of COVID and all this work from home that has occurred from that, honestly, I think you're going to see more companies, as we're beginning to see people come back to the office. And we've had, to be quite honest, there's been a lot more activity in terms of leasing and leasing interest over the last several months. But I think you might begin seeing companies telling folks just to stay at home and continue to work from home, and the employees themselves, if they have a choice, staying at home, because the cost of transportation and commuting is going to go up.
That's right.
I think that's an issue. But on the other hand, I just say we think that for the Houston market, that in the industrial side, we think that this is going to actually continue to increase the activity that we're seeing in the industrial market. I've been referring to the last year or two in Houston as the renaissance of industrial real estate. Our business on the industrial side of the market has been unbelievable. It's our industrial brokers and that part of our business has been really a driver over the last year and a half. And we recently hosted our annual Trends event that you attended, and one of the comments that came out of there, and we're going to see, I think it's going to become magnified, is that during COVID there was all the conversation about the supply chain and all the ships that were parked outside Long Beach, California, hundreds of ships. And what's happened is during that time frame, there was never more than 10 ships offshore in the Gulf Coast. And we believe that we're going to begin seeing the distribution patterns change, and you're going to see much more activity coming up through the central United States and the Gulf of Mexico. 70%. It's good news, and we think that you'll continue to see these development companies build more and more industrial space, and it will not have an impact on any kind of vacancy. We think it'll continue to get filled. 70%, I think one of the great statistics, Ralph, is that 70% of the people in the United States live east of the Rockies. And why we have continued to be bringing product across the docks in California to have to go through the long trek of shipping it around the United States, when you can bring it up through the Gulf Coast, put it on rail and on trucks and ship it up through the central part of the United States. I think you're going to begin seeing that happen in a much more than what we've had in the past.
That could be a good thing for the overall economy. And I believe our ports seem to be run a lot smoother than Los Angeles area does.
Well, I think all the things that go on with California and all the issues. Another thing that I think we should at least put on the table and be aware of is that I think interest rates are going up and going up in a big way. I don't know to what level. That's not my, you know, I'm not, look into the crystal ball, but one of the things that's happened, and I've seen it with people in our office, my own family, younger family members, is that these young people can't afford homes anymore. And, so one of the sidelights to that, or the results of that, has been, in our multifamily business, we're seeing a lot more activity in the multifamily apartment business, because young people, and not just young people, but people in general who can't afford homes are having to lease property, lease space, and that's why you're seeing a lot of this, build to lease activity. These big corporations are buying thousands of homes, and you've noticed it in the Houston. You've written about it.
Sure.
A number of developers in the Houston market, Signorelli, Robert Clay, besides Blackstone, some of these other companies buying properties, they're building these communities, and I think you're going to see
Building single family homes or duplexes, and it has the feel of a residential, a regular master plan community with yards.
I personally don't love it. I mean, I think, we all, at least, the way we're brought up. I mean, I like the idea of owning a home. It's your, as we get older, it's our probably our best asset. And if people are forced to just lease for their life, it's hard to build up any type of value or wealth in just their home that they've lived in for 10, 20, 30 years.
I know, and with inflation, the average household, that's how they keep up with eventually they keep up by the value of their home jumps.
Exactly.
When they don't get left behind, they can't. It's hard to keep up with this regular paycheck. So that's always been the big hedge. Have real estate, and your home value will go up. You may have to pay more taxes on it.
Well,
But you did bring up all these things are hitting the average consumer's pocketbook. Gasoline, like we're talking about people not. I don't want to come from COVID. They didn't want to come into the office. It's afterwards, and now there's this slow getting back to the trend of come back 5 days a week, and then you add $5 a gallon gasoline on top of that.
exactly.
The employees are going to push back against that even more.
Well, I think I have one of my daughters who has a truck, and she said, "Dad, I just filled up my truck. It cost me over $100 to fill my vehicle," and I mean that's a big hit on a young person and their salary, and it becomes a bigger part of their just expense, monthly expenses.
We've seen that there have been people that have been promoting the idea of, well, let's crank it up out there in the West Texas in the Permian Basin and get them drilling full speed ahead again to build more supply and drive down the price of gasoline for the average folks.
Well, I mean, and that can happen, but we know that a lot of what we've been seeing out in the Permian, there these wells, they produce quickly, and then they slow down very quickly too. Some of the new product that they're growing and developing out there, and once again, that does not really help the office market, or in terms of hiring people. That's we track we track drilling rigs as part of our weekly internal work here at Colliers, and drilling rig numbers have been down significantly over the last several years. And although we're seeing a small uptick in that, it's not significant. Once again, there's a lot of, one of the things the energy companies have done to their credit, but it's not necessarily good for our overall economy, is they've become more efficient in how they can drill and get these all the hydrocarbons out of the ground. So it's going to be very interesting to watch that and how that impacts I think, the overall Houston market.
Well, speaking of the Houston market and the office situation, you've done several major transactions in the last year, including, putting the law firm McGuire Woods into our newest building in Houston, the newest skyscraper, 47 stories in downtown Houston, the Texas Tower that Hines has just completed, and you brought a big law firm to take a full floor. But tell me what you think about that building, about your observations about that building and how it's coming on the market.
Well, actually, McGuire Woods is moving into that space this month, so we're very excited about that. One of the things that we really like Texas Tower. We thought one of the things that I know McGuire Woods looked at when we went through a study of, all the opportunities that were available, and there's certainly many of them, given the market today, and they made a decision to go to the newest, most efficient building in the market. As you and I are aware, there are about 5 new, what we call the newer, most efficient buildings that have been built over the last 10 plus years. The Capitol Tower, used to be the old Houston Club building, Texas Tower, which is now just opening, 609 Main, 708 Main, that Skanska is building another building over there in Houston Center. And we're finding that investment companies, law firms, companies that are looking for the most efficient buildings, better infrastructure, better systems are looking at those buildings, even though the cost on a rental basis is higher. I think sophisticated companies, Ralph, understand that the rental expense is only a small component of the overall cost of occupying a building. There's the other costs include, just your IT costs, your salaries for your employees, but more importantly, about 30-40% of the overall cost of occupancy is what we think about on the other side, the branding. What does a company want to be? How do they attract people? They're competing themselves with their competitors, whether it be a law firm or an engineering company or an accounting firm, in attracting young people to come work for them. And so being in a building that people are excited about being in, about the amenities that they offer, is something that comes into the equation when you're looking at a building that you're choosing. And that was one of the things about Texas Tower that we liked. It was a very efficient floor plate. It felt good in terms of the core of these new buildings. The core space is not as big. It'll never be as big as we've seen in some of the older. 600 Fannin. Travis. The Texas Commerce Tower, Wells Fargo Tower, because they're not as tall. You don't have as many elevator banks in there, and so that's why you'll never see a building that tall again, I think, built in the Houston market. So anyway, they're very excited about it, and
it has stuff like I was lucky enough to take a tour recently, and they have this big, I don't know, is it 15th floor, 16th floor, something, the big outdoor
right
elevated gardens that I don't know, it's probably a half an acre as you walk around in, but it's pretty cool to be up that high, in that I would think for people that want to get out and work in a more green environment, not be stuck in air conditioning all day, they probably love that. That's an amenity for a tenant.
And I think you're right. I think that one of the things that people look at today is they want as much as anything, they like to be in a campus-like setting, but it's hard to be in a campus-like setting downtown, right? Because buildings are buildings. But I will just say, one of the things that will be interesting, when we look at statistics in terms of occupancy, we found that the newer buildings, albeit more expensive buildings, have occupancy rates that are much higher than all the older, Class A buildings in the market. And that's why we've seen Brookfield and some of the other big owners spend tens, if not hundreds of millions of dollars to upgrade those buildings because they need to compete. But one of the questions that we came back to in the beginning, when you and I were talking in the beginning, is how are all these world events going to impact office space? And I think it probably is going to have a more negative impact on the buildings in the CBD as opposed to some of the suburban buildings. Because once again, suburban buildings are closer to home to a lot of these young people. So that'll be an interesting thing to watch. Downtown has had a very difficult time from COVID. It's just now recovering. People are just now coming back to work. I mean, all the big financial institutions are finally saying it's time to come back to the office. And all of a sudden, it'll be interesting to see how this financial impact, jolt has on that return to the office space downtown, because it is quiet when you're downtown and no one's down there.
Oh yeah, that's spooky. It is spooky. And I'm just glad I'm not operating a deli or something for a living.
I was just going to say, it's that I feel really horrible for a lot of those people because they're great folks. That's their life and their business, and when no one's down there, it is a struggle, and I feel horrible for them.
Yeah, it's pretty tough. It's pretty tough. Now what about? But I did notice, you look at the companies that have lease space in that building, the Heinz building, the new one. 3 big law firms, Vincent and Elkins, 200,000. But it seems to me like, and I know you're a lawyer, you kind of have a specialty in representing law firms in their office needs, and leasing, finding offices for their space. What about that particular segment, the legal segment of?
Well, what's happening with law firms is, again, like all businesses, they've taken they've focused on what the law firm will look like in terms of the most efficient way to operate. For example, I used to practice law 100 years ago, it seems like, but we would have one, if not 2, full floors of space committed solely 100% for law firm libraries, all the books. And that's where all the research was done by the youngest, by all the attorneys. That's no more. All that research is on a computer. So, that space has been taken away, consolidated. Similarly, in the traditional law firm concepts, the partners had the big offices and the associates had the smaller offices. There might have been 3 or 4 different sizes of offices, but we're seeing, and McGuire Woods is a good example, basically all offices are the same size, whether you're the senior partner or the young associate. And so that's obviously had an impact on the space requirements. And so a lot of, what we're seeing is a lot of law firms, there's much more concern about glass space. They want more space on the glass as opposed to these deep spaces for storage and law libraries and that type of thing. But that's what you're seeing law firms become. They're able to cut back on their space because of the office sizes, cutting back some space that are no longer used, and yet and you're seeing a lot of mergers and acquisitions in law firms. So law firm spaces, the big law firms continue to grow. The question is, how many lawyers you need and what happens to all these smaller firms. So, but law firms are no different than other businesses. They're obviously focused on how to cut down the costs, makes more money, the bottom line for them.
Hey, I know you're also been pretty busy in the Woodlands. So, what a lot of people know is, one of the former Anadarko Towers is now, I think, Woodland Towers at the Waterway. Is that
Waterway, right?
Yeah, it is one of the tallest suburban buildings between here and Dallas. I think it's like 31 stories, if I recall.
Right.
But you've had some success up there that kind of stands
Right.
out.
We've had that. I will say, we've had our team has handled the leasing for the Howard Hughes Corporation up in the Woodlands now for, I think, 12 years. And it started in a very small way. And when the Howard Hughes Corporation bought the Woodlands Development Company, they have really focused on the Woodlands, both from a office market standpoint, but also for their residential, for the overall development of the Woodlands, and to the point that, they've now, they acquired another 1,500 acres, north of the Woodlands that they're building single family properties on. The Woodlands submarket is really, I think, one of the most dynamic markets in Houston. It continues to be. All the statistics indicate that occupancy rates are higher than the overall Houston market. Housing sales are higher than the overall Houston market. Of course, that also includes, for the Howard Hughes Corporation, the Bridgelands, which is, on Belt, 99. But we have had, and I think I told you this when we talked several months ago, we're having a significant amount of activity up there, and a lot of activity at what we call 9950, the old Anadarko Tower. Companies see this as a tremendous value in terms of, the financial, the cost to be in that space. It truly is. We refer to it as a Class AA building. I mean, it's more than just a Class A commercial office building, because it was built for a specific tenant, an owner, and the amenities in there are, there's nothing up in that market that even comes close to it. And so when companies come in to that part of the world, that's immediately what they're drawn to, and it's a real value play for them compared to other opportunities, and so we've got 3 people up there, not including me, but 3 people on the ground that are there daily, and they're busy as a bee, showing space and putting out proposals and negotiating leases. And so it's that market is very strong, even with, Exxon giving up, a building and basically putting one of their buildings on the sublease market up in Hughes Landing. We're still, moving forward, and quite honestly, I'm very excited about it. And I would tell you, I don't know if it's a segue into something else, but we're also very involved, as you know, in the healthcare world, and we're seeing a lot of health. Our opinion is that we're going to see more and more life sciences and healthcare related business, not just in the Woodlands, but throughout the greater Houston market. And besides the Texas Medical Center and the activity there, which has always been one of the economic drivers for Houston, what goes on in the healthcare industry, and we've always thought of it just in the Texas Medical Center, but and there's a lot going on there. But what I think in the real estate industry consider the second medical center is really up in the woods. You have all the major hospitals have hospitals presence in the Woodlands. So it's and I think it's just a matter of time. We've had meetings with a number of life sciences companies and developers, contractors, because we think that we continue to see this issue of when companies are moving from the West Coast or other parts of the country, where they've been looking in Texas first, Austin. And I mean, you and I have talked about this. Austin's become very crowded, has a great vibe, but Lord, I mean, I have it's difficult for me to go up there. I went to law school in Austin, and it's a totally different place now. And I just think it's a matter of time when people are going to say, I love being in a community, Houston or the Woodlands, where I have more space. I've got great people, family. It's a great family city, and it's a great business city. And it's going to happen. And we've got the space and the ability to provide opportunities for a lot of these companies. And we're seeing up in the Woodlands, particularly a lot of companies from the West Coast looking here, and they're just they can't believe the housing options, the office options. Believe it or not, what they really like are the friendliness of the people in our community. They're like, people talk to me. People happy. I mean, you've got great schools, and
didn't they like a company from Northern California buy some kind of a pharma company or something, buy a facility up there?
They bought the former Lexicon building.
Lexicon.
It was a pharma that was a research. You used to run all the mice there, in the research forest. George Mitchell, 25, 30 years ago, was, really promoting and bringing companies up in the Woodlands from the medical center and others, and basically giving them an opportunity to be up there. And Lexicon was one that was successful. It ultimately was sold, and that building was bought by another pharma company. But, we're seeing, even in the Anadarko Tower, we're seeing technology companies and some pharma companies looking there, taking space. So, I think it's just a matter of time to continue to see that area grow. I mean, and I think in the overall Houston market, you and I've talked about, I think we could have better economic leadership in terms of attracting some of these companies. I know we're doing our best, but it's always disappointing to me when I see some of these companies that go to other cities in Texas. So that's more than my competitive instincts, probably.
Well, it'd be great to get some wins on bigger win on our side of the ledger. Every day you see a story. Oh, here goes another big company moving to Austin. Another tech company to Austin, and Dallas has had a bunch too. So
absolutely,
I would like to. We got a lot of space to fill here, and especially downtown and everywhere. Energy corridor. There's some vacant space out there too. They need help. So a few big corporate relocations would be a good thing.
Right, I agree.
Yeah.
One of the things, and again, I think we've had this conversation, but one of the things that we talk about that is attractive about Houston, besides as we say, I think the business-friendly environment, the family-friendly environment, is that the thing that some people complain about, but is actually one of our, I think, strongest selling points, is from a geographic standpoint. We really don't have any natural barriers to growth. We don't have an ocean that prevents us from growing in one direction. We don't have mountains that prevent us from, growing in that direction, big rivers, that type of thing. So we have the ability to grow and develop as our city continues to grow and people continue to move here. And that is a very attractive thing because it allows these different submarkets, the Woodlands being an example, Energy Corridor being an example of, up and down in Sugar Land as an example. These different, we call the submarkets we track, It allows people to live in a relatively close proximity to where they work and their kids go to school and where they play, and offer residential opportunities ranging from very expensive homes to much less expensive properties, and not having to go 2 or 3 hours like you see out on the West Coast when you have to go east to be able to work in in the Silicon Valley. If you can't, if you're not a tech mogul and you can't afford multi-million-dollar homes.
And affordability is an issue, and it's going to be bigger, as you say. As interest rates are going up, we know at least the Federal Reserve is going to whack us in a few weeks and come back in a couple of months and whack us again. We know that's going to happen. And
well, some of the things that you've written about, which I always enjoy reading your weekly reports, I have put in a special request to the Greater Houston Partnership to name you the head of economic development and be our spokesman, because I know that some of your ideas will come to fruition because you believe in them and you talk about them. So I'm your biggest #1 fan in that regard.
Well, thank you, my friend. We have for you guys that haven't seen the scroll across the bottom of the screen there, we've got a website, realtynewsreport.com, and we also have the R&R bulletin and weekly email newsletter, e-newsletter, I guess, that can be delivered to you. And we have a lot of people read it, and so we're always looking for more readers.
Well,
you can subscribe to our podcasts here too, so you can get these. That we're ramping these up more regularly, and so Bob will be on the front edge of this new wave here, but we get it ramped up with more. You can subscribe to all 3 of those things, and we'd appreciate it if you do. So, and we appreciate you, Bob. Thanks for taking time to talk with me. And
Ralph, it's been my pleasure. I mean, I always enjoy talking about our city and our community, and especially speaking with you. And if at any time, I'm always available to help you in any way I can.
Thank you, my friend.
Okay.
Bob Parsley of Colliers, thanks a lot, and we will talk to you again soon.
Thanks, Ralph.